YouTube, how's it going? Welcome to the second part of this market structure series. Now, in the previous video, hopefully if you've watched part one, you would have seen that I promised the outcome that you would get from this series is that you would boost your strike rate, you'd skyrocket your reward to risk ratio, and you would get that extreme clarity and confidence when you are trading the market. Now, in this video, this is where we're going to go through what I kind of view to be the secret sauce of trading, and it's really mastering market structure across multiple timeframes. And kind of really those three outcomes that I promised you, this is really where that starts to come to life, when you really start to actually truly understand how to really layer those multiple timeframes together, as you're going to see just kind of the fractal nature of order flow across those multiple timeframes. So what we're going to do in this video is, just like the last video, we're going to go through some theory first, and then we're going to apply that theory onto the charts. Where we'll just do a nice slow walkthrough together, and we'll just apply it to the charts, and you can really see how it applies. That theory applies in a more practical sense. So if you have not watched the first part of this series, hopefully I've linked it somewhere on this video. You can click that button and it should take you there. Highly recommend you watch that first, because even if you're experienced, there's going to be concepts in there that I've spoken about that we're going to go through here that might not quite make sense. I mean, potentially you've even used those concepts before, but potentially I use them in a slightly different way. So yeah, for obvious reasons, please go watch part one before you watch this. Now, also, there will be, hopefully scrolling down the screen now, a PDF that includes all of the charts and annotations that we're going to go through in this lesson that you can download for free. It's yours to keep for life, obviously. So there will be a link below in the description. Just give that a little click and you can put your email address in there. And you can download that. Now, if you signed up for the one in the part one video, right, the previous video, you shouldn't need to do it again. Hopefully you should have received this new PDF in your inbox already. So yeah, that should be there for you. Yeah, just before we go into the theory now, just want to ask you one little favor. If you are enjoying this, getting any value from that, if you could do me a massive favor, and that would be to hit that like below the video and just drop a little comment as well, even if it's just a thumbs up or thumbs down, whatever, full stop, random letters. It really helps me out, helps the algorithm, play that whole silly YouTube game. It just really helps me to get this video to a lot more reach. So appreciate that if you help me out with that. And of course, subscribe and turn your notifications on if you haven't already. So got all that YouTube nonsense out the way. Let's dive into the theory and go through this. So multi-time frame market structure, what is it? It's essentially, analyzing multiple time frame charts together. Now, why would we do that? Well, weekly chart, if we look at one candle, that on the daily chart is going to be 5 daily candles. Now, obviously, this applies to most traditional markets. Crypto market is open 7 days a week. So obviously a weekly candle in the crypto market, that is probably going to have, it definitely has 7 daily candles worth of price action, including making up that weekly candle, right? We're focused on FX. FX market shuts on the weekend. Fortunately, right, I don't want to be trading all weekend. So that's only 5 days. So we get 5 daily candles in the week. It's about 30 4-hour candles in a day, I believe, and about 120 something 1-hour candles within that weekly candle. So yeah, as you can see, obviously, that weekly candle condenses a lot of information, but it's condensing all of that, all of that order flow, down. The further you go, the more you're going to be able to see that and essentially see more information, right? The more that we essentially drill down into those lower timeframes. So really kind of another simple concept, right? Time is power. The higher the time frame you go, it's a horrible analogy again. I really hate these analogies, but the longer the time is set up has to marinate, right? A monthly candle, the amount of orders and liquidity that it takes up to kind of build, the price action that goes into that monthly candle is going to be a hell of a lot more than the amount of orders it took to form an M1 candle, right? So obviously, the higher up you go, the more prominent the move is going to be compared to trying to trade that on a much lower time frame. So in more simple terms, we always do analysis from the top down. We always start from the way up. We want to see what those overarching longer term trends are. And then we drill down and down and down to look for more confirmation and refinement to try and help us catch those turning points of the kind of more larger and predominant trend on the higher timeframes, right? So another bit of a crude analogy here, but candles to me are kind of like a bit like the iceberg, right? If you're looking at candles on one sort of higher time frame, kind of like a captain of the ship seeing an iceberg ahead, right? That it gives them information. They can spot that something's probably below the water, but unless they look below the water, they don't know how far that iceberg actually spreads out, where the danger is or whatever that they need to, navigate their way around. And that's really kind of what digging into the lower time frame price action essentially allows us to do right now. This diagram we should all be very, very familiar with, especially if you've looked at part one. Bullish market, very simple market structure. Price continues to make higher highs, higher lows, higher highs, right? That is how we see the bullish order flow of the market. Because those higher lows are continuously being protected, price continues to move to the upside. After we get that break of structure, we get a pullback, right? But we continue to keep making higher highs and higher lows. Now, that's pretty much the heartbeat of the market, right? The price runs up, it impulses up, it pulls back, it corrects back, whatever terminology you like to use, right? It impulses up, it corrects back, it runs up, it runs back, it runs up. That is the heartbeat of the market. Now, collectively, all of those runs, as you can see, that makes up what we call a trend, right? Pretty basic stuff, multiple runs, that collectively makes up a trend. So, are you ready for what is the secret sauce to really nailing and kind of mastering market structure? You are? Fantastic. Well, the secret sauce is a run on a higher time frame is a trend on a lower time frame. Okay, a run on a higher time frame is a trend on a lower time frame. Pretty basic, but again, you'd be surprised at how many people don't truly grasp this, or at least know how to kind of put it together in a really systematic and mechanical process for you to map out your market structure, for you to then set up the charts every single time, know exactly what you're looking for, know exactly what direction you want to trade in, and just really know and have a good idea of what the market is doing to then allow you to trade with confidence, to really know how far you can push trades, when you should be trading pullbacks, etc., etc. So a run on a higher time frame is a trend on a lower time frame. Okay, cool. What does that really mean? Well, let's hop on the charts and take a look. So here we have a little diagram I put together on TradingView just because it's a little bit easier to annotate. So quick recap of kind of what we're looking at in part one, right? Basic sort of market structure is price makes a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Now at some point, that bullish expectation of higher low will fail and price will break that higher low to form a lower low. We are now in a confirmed bearish market. Price will then pull back to form a lower high. But because this high here took out a strong low, this now becomes a strong high, right? It's in theory, it should be protected because it took a hell of a lot of money to form that lower low, right? To cause that trend change. So when price is pulling back up, we run with the expectation that that high will not be breached, right? We're playing within this range. Price can pull all the way back up. As long as it doesn't take out that strong high, right? We expect a lower high to form, and then we can look to trade and target this low being a weak low, right? To then form that lower low, and so on and so forth. We repeat the process. We're playing within this bearish swing range. We expect this to be a strong high. We expect this to be a weak low. So when price pulls back, we can look to try and trade short the lower high and target that weak low. Okay, so that's pretty much a very, very quick recap of basic market structure using the concept of weak and strong highs and lows. Now, going back to kind of that secret sauce phrase I was saying, a run on a higher time frame is a trend on a lower time frame. So how can we use that to our advantage? What am I going on about? Well, that trend I just spoke about on the higher time frame, right, is made up a series of what? Those runs. So that's a run up, that pro trend move. Then we have a run back, the correction, the pullback, whatever you want to call it. So that's a run, that's a run, that's a run, that's a run, so on and so forth. Now, each of those runs on a lower time frame will be a full-blown trend. So for instance, on the higher time frames, right, the white line, price breaks that high, right? We get that break of structure to form a higher high. Now, what do we expect after a break of structure? We expect a pullback on that time frame. Now, purely just talking about market structure, no supply and demand, no liquidity, none of that fun jazz, right? Purely just market structure. How can we anticipate when that pullback is likely to be starting? Well, on the lower time frames, that's when they come to our advantage because we can look for that shift in order flow, that shift in market structure, where the lower time frames will switch bearish in order to facilitate the higher time frame pullback. Okay, so what do I mean by that? Well, we have that pro trend run, right? That one sweeping movement to the upside on the higher time frames, and within that bullish run, the lower time frame will have a full-on bullish trend. So the lower time frame will be forming higher highs, higher lows, higher highs, higher lows, higher highs, and at some point, that lower time frame bullish trend will then switch bearish because price will break structure to the downside on that lower time frame. So it will take out that higher low to then form a lower low right there. Now, when that happens, that then gives us that extra confirmation that, okay, our higher time frame, that white line, is now pulling back because the lower time frames have switched bearish, right? The structure has switched bearish on the lower time frames. Now we have a confirmed pullback on the higher time frame. Okay, so now we're trading that counter trend pullback with a bearish lower time frame trend. Now, how do we know when that higher time frame is going to form that higher low? Because remember, this whole time, price is playing within this swing range, okay? So this is our higher time frame higher low. This is our higher high up here. So yes, the lower time frames are now bearish. The higher time frame is pulling back, so we can look for shorts. But we have to be aware the whole time in the back of our minds that the higher time frames are bullish. The higher time frames are more powerful. Remember, time is power. At some point, that bullish higher time frame is going to take over. It's going to look to form that higher low, and it's going to look to try and make that next pro trend swing run and target this weak high at a minimum. Okay, because we expect this strong higher low to be protected. So this whole time we're pulling back and the lower time frames are bearish. At any point, that higher time frame is going to take over. It's going to want to form that higher low, and it's going to want to continue the trend and take out that weak high. So how do we use the lower time frames to tell us when that higher low may be forming so that we can get long, we can catch this higher low, and we can target that weak high? Well, as you've probably guessed, we wait for the lower time frames to switch bullish. So obviously it's making that lower low, lower high, lower low. And then when we see it break structure, we see the lower time frame break structure to the upside to give us that lower time frame higher high. That then gives us that confirmation, not a guarantee, but a good signal that that higher low may now be in place. And now we can look to basically get long to now target that weak higher time frame high, right? Because we think that the higher low is now in place. And so on and so forth, right? So then we have that lower time frame bullish trend for that next pro trend run. Now, there will be some cases where the higher time frame pulls back, like it pulls back here, and where the lower time frame may not actually switch bearish as well. So imagine if you have two time frames that are quite close together. So let's say the higher time frame, the white line, is the 4-hour chart, and let's say the lower time frame, the orange line, is the M15, the 15-minute. They're reasonably close together, and sometimes what you'll see is the M15 will have a big swing move up like that. The 4-hour will pull back, but actually it never takes out because that is the most recent M15 swing low. And it has just an internal structure pullback, right? That substructure break. I don't want to get too caught up in substructure, minor structure and all that stuff. But essentially, if I can simplify it, the 4-hour pulls back, but the most recent M15 swing low, the lower time frame swing low, is here. So although we pull back, the M15 actually never switches bearish. Okay, so it doesn't have to switch bearish for the 4-hour to pull back. There are some circumstances when that happens. Then we see that substructure breaks the upside where the internal structure switches bullish again. We pull back in and then we can target that weak high, so on and so forth. M15 switches bearish again, then the 4-hour pulls back, and then we get that full-on trend reversal. Okay, so a run on a higher time frame is a trend on a lower time frame. We're essentially using the lower time frames, looking at the trend on those lower time frames to give us an indication when is the pullback ending and when is the pullback starting on a higher time frame. Okay. Yeah, hopefully that makes sense. Let's kind of go on to a bit more of an example you should be familiar with to kind of see how we can kind of use this sort of process. So this is what we're looking at in depth in the last video, right? Where essentially, just zoom this out a little bit. Very simple continuation, what we're just discussing, right? Let's say this is the 4-hour chart, right? Price makes a higher high. Use the highlighter tool. Price makes a higher high. It pulls back to form a higher low. That higher low is not confirmed until what? Until we get a break of structure. Once we get that break of structure, we now know where the higher low is. That becomes a strong low. Why is it a strong low? Because it did its job. It took out a high to form a higher high, right? So we now we expect that that higher low will be protected, right? There's a vested interest in that low not being breached, right? Big money has stepped in to cause that higher high. So when price breaks to the upside, we expect price will pull back, but it shouldn't breach this low here, okay? Now, like I was saying, when we first initially get that break of structure to form the higher high, we expect what? We expect a pullback on that time frame. How do we know when that pullback is going to kick in? Purely just looking at market structure. We look for that internal structure to switch bearish. So this is just looking at one time frame, right? We would look for a minor low up here, that first minor low to get taken out. So we get that first sign of weakness, we get that change of character, that chock, whatever you want to call it, right? Now the internal structure is bearish, okay? So the swing structure is bullish because that's our high, that's our low. This is the range we're playing within. But now we've taken out that first very, very minor aggressive low. We've had that first sign of weakness. that's a good signal that the swing run has now finished and we are now commencing the pullback. How do we know when the pullback's going to be over and the high-low may be in place? We look for the internal structure to switch bullish again. So we look for that change of character to the upside. Okay, now that's that first sign of that higher high in the internal structure, right? So now the internal structure is aligned with our overall bullish swing structure, because the bullish swing structure has been, well, the swing structure has been bullish the entire time. Now the internal structure is also bullish. It's aligned with our overall swing trend. So now in theory, it should be all systems go to get long, right? And target what? Target that weak high. Why is this a weak swing high? Well, because it's failed to do its job. It's failed to take out the low, okay? So that gives us a good target. So that's how we use change of character, looking at the internal structure to help us know when that swing run is over, when the pullback is starting, and then when the pullback is finished, and the next swing run is about to commence. So what's the next level to that, right? It's using multi-time frame analysis, what we were just discussing before. So here's the same kind of price action model we were looking at. So here, the white line, that's going to be a higher time frame. Just put the time frames in here that I personally use at the moment, just makes it a little bit easier to talk through. So the higher time frame, the white line is going to be the 4-hour chart. We then have the blue line, which is what I like to call my medium time frame. So that's the M15. And then the orange line is the M1, which is my execution time frame. So kind of lay this out, and then we'll go through onto the charts after this one. So 4 hours bullish, right? Higher high, higher low. We get that break of structure. What do we expect after a break of structure? We expect a pullback on that time frame. So we're expecting a 4-hour pullback. Just using market structure, how can we tell when that swing run, that 4-hour swing run is over and we're about to get a pullback? We look for that 4-hour change of character. Or, we can go on a lower time frame and we'll see the M15 change character. We'll see the M15 potentially switch bearish, switch that trend. So that minor pullback here on the 4-hour chart, that minor low, not always, but most likely when you drop down onto, say, the M15, that will actually be a swing low on the M15, right? This would be a swing low on the M15. So when we get that 4-hour change of character and we drop down to M15, you will most likely see the M15 have a bearish break of structure, break of swing structure to the downside. So essentially that minor low on the 4-hour chart is a swing low on the M15. So you'll see the M15 now switches bearish. The M15 forms a lower low. It pulls back to form a lower high. And then you can see that sustained bearish swing trend on the M15 is just that 4-hour pullback, right? The lower time frame has to switch bearish, but doesn't have to, but a lot of the times we'll switch bearish to facilitate that higher time frame pullback. Okay, so again, just to summarize, the 4-hour makes a higher high, break of structure, we're looking for the 4-hour to pull back, we drop down to the M15, we wait for it to switch bearish, that then gives us really good confirmation that the 4-hour is now ready to pull back. So if the M15 is bearish and the 4-hour is pulling back, but the 4-hour is bullish overall, right? The swing trend is bullish because we're now playing within this swing range. We expect this 4-hour higher low to be protected. It should be a strong low because it did its job. It took out the high. So that gives us good information because we now know that with this pullback, this 4-hour pullback, which is an M15 bearish trend, we know that it can pull back, but it shouldn't go any lower than this swing low, right? The swing range we're playing within theory, okay? It shouldn't go any lower than that. So we know that we can start to look for a higher low. Now, let's say price comes into a nice demand zone, right? Or whatever way you like to trade, we can start to trade here and get long, right? And there's nothing wrong with that. I do that as well. But in this theory or this lesson, we want to look at what can we use as more confirmation, right? To confirm that we are going to form a higher low here and we're not actually going to break that low and have a trend change. So what we can wait for is we can wait for the M15 to switch bullish to confirm that the 4-hour higher low is wanting to form, right? And then that just gives us that extra bit of confirmation. So as you can see here, M15 breaks structure to the upside, right? It breaks that lower high to form a higher high, right? So now that gives us really good confirmation that the 4-hour high low is in place. But we don't just want to buy straight away as soon as we get that M15 break of structure. It's poor risk to reward. We want to wait for that M15 pullback, right? To try and catch that M15 higher low to then try and get that next swing run, right? But we can time that even more and we can drop down to the M1 time frame now. Because I've seen everything I want to see. I've seen the 4-hour pullback, hopefully come into a nice demand level, come into discount pricing. I've then waited for extra confirmation to see that the high low wants to form by waiting for the M15 to switch bullish. Now the M15 switched bullish, I don't just want to jump into the market and buy at the highs, the M15 highs. Be patient, wait for the M15 to pull back because remember, the M15 has broke structure. What do we expect after a break of structure? We expect a pullback on that time frame. So when we get that M15 break of structure, now I'm expecting an M15 pullback. How can I tell when the M15 pullback starting? Well, the M1 will switch bearish because the M1 switches bearish to facilitate the M15 pullback. Hopefully your brain is starting to see how this all interlinks, right? It's just the same thing over and over again. So now that the M15 is pulling back and my goal is to get long with the M15 high low, what do I want to see for extra confirmation? Well, I want to see the M1 switch bullish to confirm that M15 high low, which is confirming the 4-hour high low. So you can see how we're using all of those timeframes together, all to just trade the same thing, but to just get that extra confirmation and extra refinement for that extra risk reward. So that's how you can see now we're skyrocketing our average risk reward because we can get really tight stops on the M1 timeframe. And we're also skyrocketing our strike rate because instead of just buying down here, right, to try and anticipate that 4-hour high low, we're waiting for all of this extra confirmation. Because of course, yes, this is a strong 4-hour low. It did do its job, but at some point, those lows can get broken. So this is why we can wait for all of this extra confirmation and refinement. So going back to what I was saying, the M15 is pulling back, the M1's bearish to facilitate that M15 pullback. I'm just waiting for that first sign that the M1 switch is bullish. Okay, M1 switch is bullish. Wait for the M1 pullback to catch the M1 high low, which is confirming the M15 high low, which is confirming the 4-hour high low. Now it's all systems go. We can get long in here. Nice tight stop, loads of confirmation. Where do we target? Well, of course, we can target, more complex things, but in its simplest form, in theory, if we are catching the 4-hour higher low, that swing high low, we should be targeting a 4-hour higher high. We should be targeting this weak high to get run. Why is it a weak high? Well, because we think that it hasn't taken out the low, so it hasn't done its job. So now, boom, that's a really clear mechanical process for how you wait for trades, how you then enter the trade, and then how you manage and exit your trade, okay? In its most simplest form. So super, super quick recap. 4 hours bullish, it had a break of structure. We want to look for that pullback to kick in. How do we know when that pullback is going to start? We wait for the M15 to switch bearish. We can then trade this. We can trade this short, but we have to be aware at any point that higher time frame, that 4-hour time frame, is going to take over. It's going to switch bullish. So we wait for the M15 to then switch bullish to confirm that 4-hour high low, but we don't want to buy straight away. We want to wait for the M15 to pull back so we can buy the high low, right? Get in at better prices, but we can wait for the M1 to then switch bullish to confirm the M15 high low, which confirms the 4-hour high low. And then boom, we get in long, nice tight stop, really great risk to reward, pro trend move, targeting that weak high. Okay, so we always start on the higher time frames for our overall directional bias, and then we work our way down and down just for that timing and increased refinements. So yeah, hopefully you can see now kind of the fractal relationship that there is with price action. Kind of a nice little diagram here that kind of, talks about that relationship. So those higher time frame runs, right, those let's say 4-hour pro trend runs, they're going to be made up of lower time frame price action. So essentially that M15 trend. That M15 trend, that lower time frame price action, that forms that higher time frame price action that we see, which in turn then forecasts that next higher time frame run, right? So again, what does that mean? Well, if in let's say part 1 of the video where we're just looking at the 4-hour on its own, and then we were looking at the 4-hour change of character to tell us when that pullback may be starting or where that pullback may be finished. What is that change of character actually telling us? Well, we're only looking at one time frame at that point, but that 4-hour change of character, most of the time was the M15 actually changing trend and switching bullish or bearish. So that higher time frame price action is forecasting the higher time frame runs, but that is made up of the lower time frame price action, which in turn forms the higher time frame price action. Yeah, so it's a bit of that, that matrix, that kind of inception. Hopefully you can kind of start to see how that has worked and how we are then combining, 2 or 3 timeframes to help us actually build trade ideas around that, to look to get involved with extra confirmation and obviously to then have really high probability, high risk reward targets as well. So yeah, just end it with this kind of phrase that what happens on the higher time frame must first happen on the lower time frame, and that's how we kind of understand how kind of intimately connected the timeframes are. Now, what we are essentially trading is a random market. Now, there's a lot of debate about whether price is random or not. I'm going to leave that debate for another video because I have some kind of interesting views on that, I guess, compared to most people. But what I would say for now is, in trading, if you want consistent results, you need to be consistent yourself. So what I mean by that is you cannot influence the outcome of trades, right? You don't have, I'm going to guess if you're watching this video, you're not trading, hundreds of millions of dollars. You're probably not going to be able to move the market. So If you can't control the outcome of individual trades, well, what can you control? You can control your actions, right? So you need to have consistent actions in the market in order to get those consistent results over a large sample size of trades. So one of the really most important ways in which we can do that, especially when it comes to market structure, is utilizing a set number of timeframes in order to build that consistency. Now, the reason why that's so important is because if you don't have kind of a set key number of timeframes that you use purely for structure, I'm talking about here now, what you can end up doing is jumping through all these different timeframes to fit a narrative to what you want to see. Okay, so let's say potentially you're looking for almost an excuse to get in long because you have a bullish bias. You can start chopping and changing between timeframes to try and look for that bullish change of character or that bullish trend change, and you're just going to get chopped and thrown about all over the place, really, and slapped by the market if you don't do this, in my humble opinion. So essentially, this is kind of real basic way that I view the market, and I would kind of suggest to you can replace these with any timeframes that you want, but I would just pick, at minimum, you want to have a higher time frame, you want to have a medium time frame, and you want to have a lower time frame. So at a minimum, you need 3 timeframes. Don't really need too much more than that. I personally do look at more than that, but really my key ones are the 4-hour, the M15, and the M1. So I'll talk about that a little bit more depth in a minute, but essentially the daily, right, that gives you my kind of higher time frame perspective. I'll look at the weekly as well, just to give me that kind of longer term, what's the overall longer term trend doing? Then I look at the 4-hour as like my main higher time frame. So that really gives me the narrative of price action. Then I use the M15 as my other main time frame. And I use that to give me my immediate bias, my kind of intraday direction in which I want to be trading in. And I would finally drop down to the M1 timeframe, sometimes lower, just to really help me with getting that extra confirmation for timing entries. So again, that daily time frame, what I'm using that, kind of what I'm saying to myself is, when is the 4-hour trend likely to turn? Because obviously if a 4-hour trend is bullish, it's not going to last forever, right? And that's when I start to use the daily to kind of give me an indication of when that 4-hour trend is likely to change. So let's say the 4-hour trend is bullish, it's making higher highs and higher lows. How can I anticipate when that's going to switch bearish? Well, if the daily is having a pro trend run, the 4-hour is going to be bullish, right? For that daily pro trend run, at some point, the daily is going to need to pull back, right? It has to pull back at some point. It's likely when the daily is going to pull back, that's when the 4-hour trend is going to switch bearish. Okay, so that's essentially how I'm using the daily chart. It's just to help me anticipate when the 4-hour trend is likely to turn. So then when I'm looking at the 4-hour, really what I'm thinking about is, am I trading a 4-hour continuation? So am I trading that pro run part of the move, or am I trading that counter trend move, that counter trend pullback? That's literally the most simplest question you need to really ask yourself in terms of market structure when you're looking at the 4-hour or your higher time frame of choice. Then the M15 for me, that basically confirms when those 4-hour continuations are ending and when the pullback is then starting, or when that counter trend pullback has now finished and that pro trend run is about to start. Okay, so again, keep it really simple. Even if you just look at the 4-hour and the M15, 4-hour, ask yourself, am I trading the continuation or am I trading the pullback? Okay, you know which one you're in. And then you look at the M15 and that basically confirms whether that pullback is now starting or whether that pullback has ended and you're about to catch that next higher time frame pro trend run, okay? And then lastly, M1 is literally just to confirm those turning points of the M15, higher lows or lower highs, right, to get my entries, okay? So yeah, know the higher time frame narrative, right? Know whether you are trading that pro trend higher time frame run or whether you're trading that counter trend pullback. Then actively monitor the lower time frame price action to give you those confirmations and those early signals. And then, yeah, just be patient and allow the trade setup to present itself. Now, you're going to see my process in a second when we hop on the charts, but I kind of, from this slide here, if I could just simplify this as much as possible, pick a higher time frame, pick a medium time frame, and then have your lower time frame for execution. Obviously, try and have those higher time frames evenly spaced. For me, if you want to copy this, 4-hour, the M15, they are the 2 timeframes I'm literally looking at 98% of the time. And I drop down to the M1 at that very last second when I'm literally I've seen everything I need to see and I'm just waiting for that little bit of extra shift in order flow to then time my entry. So yeah, make sure you just have at least a higher time frame and a medium time frame and then stick to those. Now, this is the last slide we're going to look at before we hop on the charts. And really, I think this is kind of just a little bit of a practical, quick mini psychology lesson, if I could call it that. And yeah, I guess the way to think about this is like, it's all about how do you have a bias in which way you think the market's going to go, but actually keep that neutral mindset. Okay, so In this case, the 4 hour is clearly bearish, right? The swing trend, you mark out your low and your high, that's the range we are playing within, okay? So the expectation or the expectational order flow in a bearish market is that 4 hour bearish trend is going to continue to make lower highs and lower lows until it doesn't, right? So if price then breaks structures to the downside like it has here and it's formed that lower low, what do we expect? Well, we expect price to pull back to form a lower high, right? So to create a new 4 hour lower high, the lower time frames will likely switch bullish. So let's imagine the M15 switches bullish in order to facilitate that 4 hour pullback. Now, when price returns to that previous 4 hour strong lower high, right? So it's come up to that high that we expect, it should be protected. We now expect what? That we expect that price should sell off and we'll get that next pro trend bearish swing run on a 4 hour chart, okay? So our expectation is for price to sell off. But like I was saying, anything can happen, right? We can't get too attached to our biases. We have our expectation of order flow because we have our framework of what we expect, but it's still probabilities, okay? So what our mission is to do is to observe how is price developing around that area in which we really want to get short, where it's high probability to get short, where we have that 4 hour lower high, we expect price will not breach it. So instead of just being attached to that bias, we're essentially just observe what is the lower time frame telling us, what are they signaling to us, what is the market trying to communicate to us with a neutral mindset. Now I know this can get a little bit airy-fairy at this point, but you'd be surprised at how much people get attached to their bias that the 4 hour has to continue down from here, and they don't take a message from the market. They can take unnecessary losses, or they can give too much running profit back to the market. So that lower time frame structural development within those higher time frame points of interest, that just really helps us to be in the flow of the market and execute in harmony with the market. So again, what I mean by that is, let's say price is putting back on the 4 hour, we're expecting that lower high to form. Instead of just getting in short and just then holding our profits all the way down to the low or expecting price to go there, right? We be patient. We wait for the M15 or the M1 to start to switch the structure. We wait for those to start to switch bearish to give us those confirmation. And if it doesn't and it continue bullish, then we just sit on our hands and then potentially we anticipate that 4 hour high is going to get run, that the 4 hour is going to switch bullish, and we avoid those potential losses, okay? Or if we are already in a short, but then price starts to switch bullish, we can manage our risk accordingly, okay? So it's all just a mechanical framework to help guide us through the order flow of the market. Okay, so that's the end of the theory. We're going to hop on the charts now and apply this and get really practical, and hopefully it will make the penny drop, I guess, really, of how I use kind of all of this theory to make what I think is a reasonably simple and really mechanical framework for just mapping market structure. Now, before we do that, just quickly want to talk to you guys about the course and mentorship program, obviously that I offer, the Zero to Funding course. So if you know nothing about Forex whatsoever, I literally cover everything from A to Z, complete beginner basics, all the way to really advanced technical analysis. Kind of the way I lay out the course is I'll go through theory like we do now, then I'll go and hop on the charts. I'll do a walkthrough on a section of price action. I'll then set you a bit of homework, okay? So I'll give you a section of price actions to then go and apply those concepts yourself. Then you will do that. Then in the next video, you'll watch a walkthrough where I'll then go through that with you and you can kind of compare and contrast your analysis to mine. And it really helps you just to quickly spot maybe those gaps in your knowledge or where you may be going wrong. And it just speeds up that learning process a lot more with kind of, that dynamic thing. And we've got tons of lessons in here. Super in-depth stuff. And then of course we also have the pro service, which is where the photon service, which is where we go through all of my market commentaries. So essentially where I will break down all of the week's previous price action. So on euro dollar, we'll go through all of the trade setups, high probability trade setups that meets my plan. And then we'll look at the outlooks for the week ahead across euro dollar, pound dollar, and Aussie dollar as things stand. And then of course we also have the trading floor, which is on Discord. So essentially this is where all the traders are in there. I post my markups after every single London and New York session. So we look at in depth all the breakdown of the high probability trade setups. I also post my analysis before every single session as well, so you guys can kind of compare your analysis to mine and just really give you that confidence that you're looking at the right things for the trading session ahead. And of course we've got loads of other channels in there and analysis channels and stuff which I won't go through now. So that wraps it all up. Let's hop on to the charts. Right, now we can get stuck into the real juice of it. So here I've got obviously a split chart screen layout, whatever you want to call it. Top left we have the weekly chart, bottom left we have the daily chart, top right we have the 4 hour, and bottom right we have the M15. Now, as always, you should always start from your highest time frame that you use, right, and then work your way down just to make sure that you know what current swing range we are playing within. So for me, I just want to know, basically, I want to map out my most recent swing high and swing low and just know what the weekly range is. Now, if you zoom in a little bit too near, right, you may think that something like, for instance, we could be playing within this bearish swing range. You might be right, you might be wrong, but what I always advise you do is you read the story of price action. So what does that mean? Read it like a book. You wouldn't necessarily, some of you might do, but I personally wouldn't read a book and just jump into the last chapter, right? I want to start from the start and make sure I understand the full story. So zoom out. Now, this doesn't mean you have to go in and analyze every single high or low from the dawn of time, the dawn of the market, but we can clearly see, right, at this point, this whole section of price action, we then break out of that and we're clearly bearish on the weekly chart from that point onwards, right? And we're playing within this large weekly swing range. So what I'll very quickly do is I just scan through it just to make sure, I've got my highs and lows pretty much in the right place. So here for me, that is on a swing pullback. It's a very, very minor pullback. So this would be my swing high and this would be my swing low, which we can see eventually price does break and close below that low. You can just use a straight line just to make sure, right, that definitely breaks that weekly low there. Remember, I need to see a candle closure below the low. So for me, that counts as a valid break of structure. Now, at that point, where is my weekly swing high? Because remember, some people, they would look at this as their high. They would look at this as their high. For me, they are not swing highs. Swing structure or swing high is the highest point that broke the low, right? So for me, from that pullback, where's the highest point that led to that break of structure? That would be this line up here. I'm just going to use a solid line so you can actually see it. That would help. There we go. Maybe make it a bit thicker, right? So that's essentially where the weekly chart then switches bullish. Right, I'm not going to draw these all out because I don't want to, I want to save a little bit of time, right? We then get another break of structure. So where's the lowest point that broke that high? It's this low here, right? But then price comes down and it takes out this low. So then we switch bearish. Let's just zoom in. We are bearish for quite some time. All right, we have these swing movements, we pull back, we then take the low, which then means we take the high. So at that point, we get a bullish break of structure, we switch bullish, but then we take the low, so we switch bearish again. You can see a lot of volatility back then. Okay, and then we come up and we take that high, so we switch bullish again. All right, so then at this point, this is my swing low, we pull back, that's my swing high, but we lead to a break of structure. So whereas my swing low at that point, it's the lowest point, right? This low here that led to the break of structure. And then we start to pull back and then come into more, the current point in the market. We then took out that low recently. We got a closure below there on the 27th of September that week. And we now are in a bearish range. So we are bearish. So if you had zoomed in and drawn that on, you would have half been right. But my swing high is not here. My swing high is the highest point before that low broke. So this is my swing high, okay? So for me, at the moment, for the weekly to switch bullish, this high would have to be broken. So right now, I know what range I'm playing within. I'm playing within that high and within this low here, okay? So price can pull all the way back up and then go down, and that's fine. It never switched bullish, okay? That is price staying bearish the entire time. So what I'm going to do now is I'm just going to go through some price action, kind of just looking at how we can anticipate that weekly pullback and kind of dig into some of this stuff, where the weekly tried to form a high low there. And I'm just going to end it by looking at kind of where we are within the current market and look at an example or two down there for you guys. So if I can kind of just make you imagine we're kind of back at this point in the market where we are still currently bullish on the weekly time frame, let's dive into that. So when we get that initial weekly break of structure, right, when we take out this high here to form a weekly higher high, again, we're going to get into supply and demand, all that stuff later, but for right now, I only want to talk about market structure, okay? So we nail that first. What do we expect after a weekly break of structure? We expect a weekly pullback. How can we anticipate when that weekly pullback is kicking in? We wait for a change of character. So where is that change of character? Well, if you look at the price action, right, we have a little pullback, we move up, we have a little pullback, and then both of those candles break the prior candle's high. So that's all part of the up move. And then we pull back. So for me, that is the low that gets taken to cause that change of character. Okay, so if I mark that out, this low here is that kind of micro low, minor low, whatever you want to call it. That for me is where the weekly change of character occurs, and that signifies that that weekly pullback is starting. Okay, then we pull back, come into a nice level of demand, discount prices. The expectation is what? The expectation is that this strong low will hold. Why is it a strong low? It's a strong low because it did its job. It made a higher high, right? It formed that higher high, it took out the high. So in theory, of course, it's not 100% foolproof. This low should hold. We should form a high low here and go on to make another higher high. So as price comes back in and we're anticipating that a high low may form, What can we wait for extra confirmation? We can wait for a bullish weekly change of character. So where does that happen? Where you can see price comes down, all of those candles break the prior candle's low. This candle doesn't, so that's a bit of a minor pullback. Then both of those candles break the minor candle's low, so then that becomes the high that needs to get taken. So at that point, that's where we get our bullish change of character on the weekly chart. Now, it's not a hard and fast rule, but generally, those changes of character on one time frame are generally a break of structure, so a trend change on the kind of the next obvious lower time frame. So in this case, those weekly changes of character are probably going to be daily trend changes. So that will most likely be the daily switching bearish, and this will most likely here be the daily switching bullish to confirm that that high low may be in place. So let's take a look at that. So this is kind of how we're pairing two time frames together, right? So here's a daily chart. It'd be helpful if those lines appeared on the daily time frame, right? There we go. Cool. So if we scroll over to the daily chart, let's in fact just open it up. So at this point here, we can clearly see, right, when the weekly was bullish, so was the daily. Surprise, surprise. We had a daily pullback to form that swing higher low, higher high, pullback to form that higher low, and then we got a higher high. Now, this is the weekly change of character, but for me, that would be the daily swing low getting taken. And once we got that closure below, that would be the daily switching bearish, okay? So you can see at this point, you know, not always it lines up perfectly, but this lines up pretty nicely where that daily trend change is a weekly change of character, okay? So that daily switched to a bearish trend anticipates or gives us confirmation of the weekly pulling back. Now, how could we have anticipated? Like, let's say price came into a lovely level that we loved. We had really high conviction that we were going to get that weekly pullback from the supply zone. You know, we can wait for that daily trend change, right, for extra confirmation. There's nothing wrong with that. But let's see, that's probably like a 200 pip move, right? Yeah, a good nearly 300 pips before we get the confirmation. Maybe we want to anticipate that move before it happens. We want to get it a little bit earlier. How can we do that? Well, we can look for a daily change of character. Okay, where does that change of character occur? It occurs over here because we have the movement up, we have a little bit of a pullback, we have the movement up, and then we get our daily change of character. Now, you can use the inside bar here, but we'll just keep to the more obvious one for now, okay? Just to keep things simple. Right, so that's our daily change of character, which anticipates the daily pullback, which obviously led to the daily trend change. Now, like I said, not always, but probably what is that daily change of character going to be on the 4-hour time frame? You guessed it, most likely a bearish trend change. So if I scroll back, if I can find it up here, bingo. Okay, so 4-hour trend, let's make sure we're mapping it correctly, right? We pull back, we then take that high, we then pull back, and then we take that high. So that lowest point there, that is the swing low, right, that we need to see for the 4-hour to switch bearish. So that's a 4-hour breaker structure, which was the daily change of character, which anticipated the daily trend change, which then anticipated the weekly pullback, right, as we got that weekly change of character. So hopefully you can start to see kind of how kind of, you know, intimately connected all of these timeframes are and how they anticipate, just what we're seeing and confirming those pullbacks and those trend changes on each time frame. So yeah, let's kind of look at a little bit more of the price action. I think a good bit to kind of talk about is this bit here. So we got that daily bearish trend change. We then pull back up, right? And then we have another breaker structure to the downside. So that daily bearish trend change, or that daily bearish trend, is continuing. Now, price tries to go back up, right? It tries to take out the swing high to form a higher high. But remember, and this is key for me, for a swing breaker structure, I need to see a candle closure above the high to confirm that. So whatever time frame you're looking at, you need to wait for the candle closure to really confirm whether it is a true breaker structure or not. Because as you can see, intraday we traded all the way up here, but then we closed the day back down here, okay? So that was just a liquidity grab, and that's why I want to see those breaks of structure to confirm it. So the whole time we actually stayed bearish, we got that grab of liquidity, and then what do we get? We got a daily change of character as we took that minor low, and now at this point, what can we do? We can target a lower low. We can target this weak low. Why is it weak? Because it failed to do its job. It failed to make a higher high, right? So when we see that happen, liquidity grab, daily change of character, that gives us great opportunities to short and target that weak daily low. Now, what do you think that daily change of character most likely was on the 4-hour chart? It was most likely a 4-hour trend change. So let's take a quick look at that. Okay, that's the bit of daily price action we were looking at over here. Scroll over on the 4-hour chart. Yeah, we can see, right, that's the swing low getting taken. 4-hour then switches bearish. That's the daily change of character. Boom, we can target the daily low. Right, same thing. At this point, let's jump ahead a little bit. So weekly's bullish, we're pulling all the way back. Let's say we come into a nice level that we really like. We're anticipating that that high low is going to form. how can we get in early? Well, the kind of best confirmation would be to kind of only jump down one time frame, so the daily chart, and you would look for a daily change of character. So if we're anticipating that this weekly high low is going to form, we've come into a level that we really like, for instance, we're looking at the daily and we're looking for that first sort of bullish signs. What do we have? Well, we have price having a minor pullback, we come down, and then we take that high. So that there is a daily change of character. On the 4-hour chart, that will most likely be, if I delete these drawings, get rid of these orange lines here, that daily change of character is the 4-hour switching bullish, okay? So that line there is the 4-hour swing train switching bullish, okay? Now, how could we have anticipated that even earlier? We don't have to wait for a daily change of character. We could look for a 4-hour change of character, right? Because price is bearish, we take that low, we come down, we have a minor pullback, and then boom, we get the change of character, we come back in, we can get long, and we can anticipate, that weekly high low. The lower and lower you go, the less confirmation you have, the riskier it becomes, because if you were to trade, say, every 15-minute bullish change of character down here, eventually you're going to pick the bottom. You're going to pick that potential weekly high low. You can put it on Instagram, show off to all your mates, you can look like a G or whatever, but you probably took about 50 losses on the way down, right, before you actually caught that weekly high low, because you're trying to anticipate a weekly movement, with just a 15 minutes switching bullish. But the 15 minutes is going to be switching bullish constantly the whole time the weekly's pulling back, okay? So that's why really, the higher time frame you go, obviously the more confirmation you have. So that daily change of character is really where you can then start to thinking, okay, maybe that weekly high low may now be forming, and now we can anticipate that movement, okay? Now, another point I also want to make when using multi-time frame analysis is, where's a good example of this? Okay, over here. So at this point, let's imagine that we think that the weekly high low is forming and we're trying to anticipate that weekly higher high. The daily now, once we break this high here, has switched bullish. Okay, so we have a nice daily bullish trend and we're trying to get that movement to the upside, and we are trading this on the 4-hour chart. Okay, so obviously the 4-hour chart is also bullish at this point. We get higher highs, higher lows, and then a higher high. And then if I zoom into this bit of price action here, what happens? Price then takes that low and it switches bearish. Now, if you're only using the 4-hour chart kind of as your higher time frame, that's fine. But you can get short on a lower high, and you can go, okay, we've changed trend, I'm going to get short, and then you're going to start targeting, that EU is going to go to hell and maybe take out these lows down here. And then you're wondering, well, why didn't it go far? Why did I take a break even or a loss as price reverses against you, even though you were trading pro trend, even though you were trading with the 4-hour bearish trend short? You're scratching your head as to why it didn't go very far and you didn't get your nice $300 trade or whatever the hell you were looking for. Well, it's because it was just a daily pullback at that point, right? Because, well, what had happened? We'd had our daily break of structure. So what do we expect after a daily break of structure? We expect a daily pullback. How do we know when that daily pullback is likely to occur? We get a daily change of character. So that doesn't happen until here, right? You see how we take that low? So that's our daily change of character. That's when we get the 4-hour bearish trend change. But it's just a daily pullback. So that's why you have to anticipate that, yes, the 4-hour has switched bearish, but how long is that 4-hour bearish trend likely to last? Probably not that long, because we're in a bullish daily market. It's just a daily pullback, especially when it's that first initial trend change as well. The pullbacks usually aren't that deep on Eurodollar. So the moment that we start to see changes of character switch bullish on a 4-hour chart, you can start to anticipate that may be the daily high low. Now we can target that week daily high, right, to get that daily high, so on and so forth. Right, hopefully that's starting to make sense. I don't want to do a full walkthrough. If you guys kind of want that, I literally go through this super slowly, and I go through almost a year's worth of price action with all the timeframes together, just to make sure you've got all the the concepts really drilled down in the course. So yeah, don't hesitate to take a look at that if that sparks your interest. But for the sake of this video, I don't want it going on for hours, as I'm trying to kind of cover everything in one video, so kind of have to go through it at a bit of a quicker pace than I would like to. But let's just kind of look at a more recent trade example, and then we'll wrap things up. So at this point, end of September, right, we got that bearish weekly break of structure to the downside, the weekly switch bearish. What do we expect after break of structure? We expect a pullback on that time frame. How can we anticipate that pullback? We look for a change of character, okay? Now, we haven't had one on the weekly chart just yet, but what do we get on the daily chart? Well, we do get a change of character. So let me just zoom out a little bit. This is, right, my daily swing high, and this is my daily swing low. Now, zooming in, you see how we get the change of character? Well, we just spike that low there, right, back on the 12th of October. That then means that this is a high. So then price moves up and it takes that high. So that for me is a bullish daily change of character, a bullish chalk, okay? What is that daily change of character most likely going to be in the 4-hour? It's going to be a 4-hour bullish trend change. So you see over here, right? that was the lower high, that took the low, and then price came up and we switched bullish at this point, which was the daily change of character. So the 4-hour switching bullish is the daily change of character that anticipates that daily pullback. So now we can ride that pullback, right, that daily pullback with the 4-hour bullish trend, but we have to, anticipate that maybe that 4-hour bullish trend isn't going to last that long because it's just a daily pullback within a daily and weekly bearish trend. Does that make sense? Hopefully it does. Okay. Now, when we get that 4-hour breaker structure to the upside and the 4-hour switch is bullish, what do we expect? We expect the 4-hour pullback. Okay. So how can we start to anticipate or potentially trade that pullback short? Well, obviously there's things we can look at. Like I said, not going to get too stuck into that stuff now, but nice supply level, right, to facilitate the pullback. But right now we're concentrating on market structure, so we can look for a change of character, which is what we get here, right? We get that 4-hour change of character, then we get a bit of a short-term pullback to trade, then we get a bullish change of character, pullback's over, and we get a higher high. But, that's on the 4-hour chart. Maybe we can drill down a little bit lower, and we should actually get better risk reward to trade this move here. So let's dive in and let's see how we could have got that 4-hour pullback on the M15 time frame. Now I'm going to talk through this with bar replay just to kind of really show you kind of my thought process of how I'll be looking to do this. So remember, this is the 4-hour breaker structure here, this green line. So I'm anticipating to play a 4-hour pullback, right, a counter trend move. The M15 is clearly bullish. We've had an M15 swing breaker structure here. So that is my M15 breaker structure. Now I'm trying to play the 4-hour pullback. The M15 for me will not be bearish until we take out the swing low. So I need to see a break of structure down here. But we're coming into a nice supply level. Potentially, I want to anticipate the M15 switching bearish before it does. So what do I wait for? I can wait for an M15 change of character. So I can wait for this minor low to go. So be nice and patient. Just wait. Prices come into our supply zone. We get a nice reaction. Okay, boom. Being patient, waiting for that change of character. Boom, we've wicked that low. Remember, for a change of character, I don't need to see a closure below. I only need to see a candle wicket. That's enough for me to show a sign of weakness. Now we have a change of character. I'm going to look for that pullback, look on the M1 for the lower high, and then we can play that move down to here at a minimum, but trying to anticipate that we are going to switch bearish and get that deeper 4-hour pullback, right? So we'll keep an eye on this demand zone in case it holds and the 4-hour and the M15 bullish trend continues. But now we've had our change of character. I'm going to look to get short, right? Boom, we can look for our short entry in the lower time frames. Not going to cover that now. And we can trade this short into at least demand, but anticipating we may change trends because the 4-hour wants to pull back, okay? Now, if you want to trade long from here, but you're not sure because we're coming off supply and the 4-hour may be pulling back, you don't have to just get long here. You can wait for what? You can wait for the M15 to show bullish signs by having a bullish change of character, right, back to the upside. So just be patient for that. Wait for price to do that. Now at this point, I would need to see this high go for there to be a bullish change of character because we're pulling back, right? All of these prior candles break the prior candles low. So this is my internal high that needs to go. Okay, so waiting for that. Okay, now we've taken another low and now we've had a close below the swing low. So for me, that is now a confirmed bearish trend change on the M15. And you have saved yourself a loss there if you try to get long on that demand because we never had a bullish change of character, okay? So now that high we need to go for a change of character, okay? But remember, the M15 has now switched bearish. That gives us really good confirmation that we can trade that 4-hour pullback. But at this point, what can we do? Can we get into a trade? Yeah, we can because the M15's broken structure. It's bearish. What do we expect after a break of structure? We expect a pullback. How can we anticipate that pullback? Or we wait for a bullish change of character. So what do we wait for? Well, we can use demand as well, right? Old demand can come reaction points for pullbacks. We're coming into that level. Don't just want to trade it directly. Pretty risky trading counter trend. Let's wait for a bullish change of character. So now this becomes my most recent high. Let's wait to see if that high goes to give us confirmation. Okay, now we've had a change of character. Let's look to play that counter trend long and we can play it back up into supply levels right up here, up into the premium and see if we can catch the pro trend trade like that. So essentially what I'm trading here is the M15 counter trend pullback to then try and catch the M15 lower high, right up here. Wrong button. I'm looking to trade long, counter against M15 up here, then look for the short, right, to catch the pro trend M15 lower high to then catch that 4-hour pullback, that deeper pullback, right? So you can just see how the change of character is confirming our levels. Right, probably going to come into another demand zone down here. But let's see, what I want to trade now is I'm looking for, where can I get short, okay? So we traded the counter trend long if you want to, of course you don't have to. But remember, the M15 has now switched bearish. So we're playing within this M15 swing range here, right? Now, if I draw on this supply zone up here, it's a pretty nice level that we can look for price to come into. Could just get short there, or what can we wait for? We can wait for confirmation. We can wait for a bearish change of character, come into our level. Okay, boom, now we have it, right? You see how we've taken the low, being nice and patient. Yes, we could have gotten short up here, but get rid of these lines. We don't have to. We can wait for that confirmation. Now we have that confirmation, freshly created supply. Boom, now we have all the confirmation we need for that pro trend M15 lower high to get short, to play the 4-hour pullback. Had our confirmation right, patiently wait. Now we get tapped into entry and we can target this M15 swing low as our first kind of minimum target, right? Even though I just whack this on, don't want to get too caught up in entries just yet. And then you've got a quick, let's see, just even to the low, super simple trade. Pro M15, obviously against the 4-hour trend, but there's your quick 5R. Let's see if it plays out. Bit of a choppy one, kind of messy, but it's counter the 4-hour trend, right? So counter trend movements are usually a bit more corrective, and you've got 5R there. So let it play out a little bit, and I'll show you the 4-hour chart, right? So that whole movement, again, just to quickly summarize, we had a bearish weekly break of structure. We're expecting potentially we may get the weekly pullback. We've had a daily change of character right here because it took the low, which means we have a high here. So the daily change character, which gives us a good sign we're going to have that daily pullback. That daily change of character was what? It was a 4-hour bullish trend change. So now the 4-hour is bullish, but we've had a 4-hour break of structure. We're coming to a level of supply. So now we can look to play the 4-hour pullback. How can we play the 4-hour pullback? Well, we can wait for an M15 change of character, or you can get a short here, yeah, or you can wait for the M15 to switch bearish. The M15 switches bearish. Now you don't have to wait for the lower high. You can trade that pullback, right? That quick pullback, but don't just jump in straight away. Wait for a bullish M15 change of character. Now you get in. Right, so the internal structure is bullish. It comes up into our supply zone. Now we want to trade that M15 lower high, right, to trade more of that 4-hour pullback. Wait for a change of character to confirm that level. Bearish change of character, pull back into your supply zone that caused a change of character. Boom, there's your quick counter trend trade. Obviously, you can push it a little bit further, but tend to be a bit more aggressive with counter trend movements. And then obviously, what do we get? We then get a bullish change of character again. We switch bullish, come back into demand, and then we're off. And then you can catch that 4-hour high low to then target that weak 4-hour high. So on and so forth. Now, I'm going to leave that there just because this video is getting on pretty long. I don't want to go on over an hour. I'm not even sure how long we've been recording. Hopefully that makes sense. Hopefully you guys have seen kind of how I've applied those concepts that we learned in part 1 now to the time frames, and we put those together, and you guys can kind of start to see my process. Now, I've gone through a little bit quickly. It might be a bit confusing to some of you, hopefully not. But if I could kind of end it with kind of one piece of advice, it would be to just pick obviously your higher time frame and your medium time frame, and then have your lower time frame purely for your execution. If you kind of want to follow what I mainly do, I use my 4-hour as my main higher time frame, the M15 as my main medium time frame, and obviously the M1 for my execution. So the 4-hour and the M15, I'm looking at them all day long. They're literally the main two charts I'd have up on my screen. And all I want to know, right, is basically, am I trading that 4-hour pro trend move? Okay. And then when am I going to trade the pullback? So once the M15 starts to change character or switch bearish, that's when I start to trade that pullback. But I don't swing for the fences. I'm pretty quick with my targets. I'm aggressive. Why? Because I'm expecting that 4-hour high low to form at any point. So the minute that price starts to break the structure to the upside of the M15, boom, wait for a pullback into demand. Then you've got a pro trend move, target the weak 4-hour high. So I'm just patiently waiting for the M15 structure to align with, what part of the 4-hour I'm trying to trade. So if I'm trying to trade that 4-hour bearish pullback, I just wait for the M15 to switch bearish. Then if I'm trying to catch that 4-hour high low to get the next bullish 4-hour run, I just wait for the M15 to switch bullish, boom, let it pull back, comes into our area of demand, drop down to the M1, get even more confirmation if you want. You don't need to, but there you go. That's as simple as you can keep it. Obviously, bring in the weekly and the daily time frame, so that really helps with really pushing your risk to reward that much further, because you can target those weekly and daily runs and pullbacks, and just know where you are within there. But you don't need to do that if it's a bit confusing with a lot of moving parts when you're kind of first starting out. But yeah, have a higher time frame, have a medium time frame, and then if you want, use your lower time frame for execution, and just keep those separate. So yeah, that wraps it up. I'll leave that there. Hopefully you guys took some value from that. Like I said, it would help me out a massive amount if you could just hit that like button, drop a random comment or whatever, any questions, really helps me to boost the algorithm. Like I said, if you want to join a community, I go through this at a much slower pace, tons of videos where we really dissect this step by step. Just give me a shout if you're interested, or click the link below in the bio, and make sure you download the PDF as well. That will have all of that theory and charts for you that you can keep in your folders. So with that said, I hope you guys have a good week, and I'll see you in the next one. Peace out.